that way.
All right, hello everyone. Welcome to today's training. We're going to be talking money and business today. This is by special request from so many of you wanting to tackle a little bit of the business finance side instead of just the personal side. So while we're waiting for everyone to join us, this is really a private coaching call only. So this is a small group and it's a safe place, so feel free to engage, ask your questions, let me know what you need as we go along today's talk. I'm here for you. I'm willing to stay on as long as it takes to really dive in to some of the business financials. And this is such an important piece of wealth building. And I think it's something that's not really taught or talked about enough, especially those of us in real estate or small business. I mean, most of you that follow my teachings are in the real estate business and or are entrepreneurs. So you tend to rely on or try to manage an income that's not stable necessarily. Maybe you might have some good months and some not so good months, or sometimes you might have a great big check that needs to last for a while and don't really know how to manage that. So anyway, that's what we're going to talk about today. While we get started and wait for everyone to join, go ahead and type in, what is your business? So this will really help me today as I go through the deck and the training I put together for you. This will help me know how to teach it to you, because it's going to be a little bit different. Fundamentally, it's the same. Specifically, it may look a little different if you're in real estate as opposed to some other type of business. So I own both the real estate business and other businesses, so manage a lot of books. So I can speak to different types of books. But really, the takeaway here is fundamentally, business accounting is fundamentally the same, no matter how small, how big, what type of business. The fundamentals are the same. The accounting terms are the same. When you get into bigger business and corporate business, they have a lot more things, a lot more items on their financial statements that we as small business don't necessarily have to worry about. So on the small business side, it's simpler. It's certainly simpler accounting. And that's the good news. Maybe the not so good news is it's still accounting, and we still do have to account for our money through our business, just like we need to account for the money in our personal side. So that's what we're going to talk about today. So let's see. Sandy says she's in real estate sales. Naomi, she's a realtor and her husband is fly fishing, a fly fishing outfitter. Excellent. Well, my business partner, Tamara, her husband loves fly fishing. So we may put him in touch with your husband, Naomi. Cheryl says, I own a real estate brokerage where I'm the only realtor. Okay, that's great. Janine says, real estate professional, residential sales, yet my business is set up as a corporation. Good. That's what we want. That's actually great news. So you might have a few different questions, Janine, than some of the others, since you are set up as a corp, and you're probably an S corp, I'm guessing. But anyway, if you're set up as a corp, you probably have a little bit more of a basic understanding than maybe others on the call. But good job on that, because that is really a tip that we all, if we're thinking ourselves as businesses, we all want to be set up as a corp, and most likely an S corp. Joanna's a realtor. Penny's an independent insurance agency. Excellent. Susie is a real estate agent. Tanya's I'm a realtor and also run a transaction coordinator, admin, secretary business for a couple busier agents. Excellent. And then Pat says retain search, career coaching, and LinkedIn training workshops. So 3 revenue streams right now. Excellent. So great. This is going to be a fun conversation today. Thank you for sharing that. Like I said, it's helpful, and a lot of real estate, but everyone that's piped in so far, we're all small business. So like I said, fundamentally, this is all going to be exactly the same for each of us. All right, so as we go through today, I want to encourage you, really engage with me. I'm going to be talking pretty high level. I may go to the board and write some things just based on your questions. So be patient with the technology, because I'm going to have to go back and forth between the camera, the deck, and manage a few different technological things. So be with me. I'm going to stick here through the very end to answer all your questions. And I just ask you to be a little patient as we're going back and forth to try to deliver to you the best information and make this a really good event for you. So most of you know me, but when it comes to business and finance, I too am a business owner, and I own several different businesses, and they're all different corporations. So what that means is I'm managing a lot of different books, and Gary and I are very much into our money. We look at all the different books of the different businesses. We have different operating partners in some of the businesses. So we have to manage books with them and hold them accountable to their pro formas and some of their budgets. But basically, bottom line, we're in the books all the time. So when you're managing this many businesses, clearly you can think that a big portion of our time is just looking at the numbers. And so this was really scary for me early on. Like, I think most of you know my story on the personal finance side, but then getting into starting my real estate team when I worked with Keller Williams and trying to learn how to manage that, because early on I was selling a lot and then trying to learn how to leverage myself through building a team. But it ended up that I didn't know really. I was getting better with the personal finance side at that time, but I didn't know how the business finances worked. So I was working really hard and delivering all these leads and setting up business for 5 or 6 buyer's agents at the time. But at the end of the day, I wasn't making any money. So I couldn't figure it out. Again, I'm like, what the heck? Why am I not making any money? And it really boiled down to I didn't understand how business accounting worked. And so then my normal way of doing things, I'm like, okay, I've got to figure this out. So there must be something to learn here. So I really did. I started learning and unraveling, okay, how does this business finance work? And it was very intimidating. I mean, a lot of accounting terms and monies coming in and out. And man, now I have people like independent contractors that work for me. And I have a person on salary on staff that was my, my assistant. So I was a little fearful. Actually, I was quite afraid that I wouldn't know how to do this. But the good news is once there's a couple of good pieces of good news is I learned that it's actually not that difficult. So with just like in the personal finance, the business finance side, it's about 80% behavior and 20% learning. So really, we do have to learn a few fundamentals when it comes to personal finance and business finance on the small business side, but it's 80% behavior. And I think that's going to be one of the biggest takeaways here, that once we learn some of these things, you might all by the end of the call today be thinking, wow, that's really not too difficult. It really isn't. We can all do it. So if any of you, like me, have that initial fear, like I can't do this, or it's money, or it's numbers, or it's accounting, let me assure you, if I can do it, everybody can. And especially if I can manage this many businesses and understand the financials, everyone can, because it's not my nature either. So that's the good news. The bad news is we have to be in our books. There's a word that's so there's the word called accounting. So I like really looking at words. And when I look at words, I'm trying to look at the root of the word and see what other words are inside the word, or the root word, the definition. And there's a couple different words in the word accounting. One is account, so like accountability. So part of accounting, we need to be accountable to our money. So if we're going to be business people, if we're going to use our business to fund our personal life, we have to be accountable. And what accounting is being accountable to our money. We have to be accountable to it. So we need to hold ourselves accountable or have somebody else hold us accountable. And that's a big part of the coaching program that most of you are in, is part of what we do through the coaching program. Besides teaching and training is just that accountability piece, just to remind you, to remind that 80% behavior, like, oh, have I checked my money lately? The other part of it is the word count. So accounting in there is the word count. So I don't know if the word accounting comes from the word count or not, but it really struck me when I started thinking about this, like count, it's counting. It's counting your money. So we need to count. We teach our children how to count. We count things all the time. And money is really important to count. We need to learn how to count our money. And the behavior is accounting, like we're accounting for it. We can account as a verb. So all of that to say that, one, we have to get good at it. Two, it's not too difficult. But three, we're going to have to probably change our behaviors and get over some fear. And then four, we need to turn it into a practice. So go ahead and type in so that I can address this specific question at the end of my talk today. Tell me your number one challenge with business finance. Number one, I want to see if I cover your question just through the talk that I put together. But if not, then we can address the specific questions you have or concerns you have or even fears you have when it comes to your business financials. So go ahead and type that in now. And then, like I said, I'll circle back around and I will address each of your business finance challenges at the end of the talk. So go ahead and put those in now. So as you're typing those in, I want to start off today's talk by asking you, this is a yes or no question. And this is really how you answer this question is really, again, going to set me up of how I'm going to move our conversation today. But my first question for you is, do you co-mingle your business and personal monies? Meaning, do you just have one account where all the income goes in and all the income goes out through expenses? And then so you're really left wondering, like I get questions all the time, for example, is where do you put your business expenses in the cash flow system? And what that usually tells me by nature that you're asking that question, that you're co-mingling your finances. And that's something we want to address today. So your questions are, or first of all, tell me your number one challenge with your business financials. And then next to that, go ahead and tell me yes or no, do you co-mingle your business and personal monies? All right, so I say yes, I co-mingle, sad face. I do not co-mingle, all business expenses are in a separate account. Knowing where to file okay, let's see. So we have lots of yeses. No separate accounts. All right, well, it looks like we're almost 50-50. I'll keep watching those, but I'll be talking through this today. All right, so this is where I want to start our conversation. There's a quote that says, a small leak will sink a great ship. And I love some of these quotes are just real principles. And this is a principle. You might even write this down because this is so important. I mean, it's a small quote, a fundamental principle that is really meaningful and important because it's a truth. And a small leak will sink a great ship. A small leak will sink a great ship. And when it comes to our finances, the same thing. The reason why we have to count our money and hold it accountable or be accountable to it is because when we're not holding our money accountable, when we're not counting our money, when we're not looking at it, we're not monitoring it, engaging with it, watching it, observing it, managing it, controlling it. It's all these leakages. Not usually we just don't have one small leak like in this example, but it's all these leakages, as I call it, in our personal finance and then even over the business side that they sink our financial situation. They sink us. And then we find ourselves in a situation where, where more money is going out, is coming in, or we're barely getting by. We find ourselves in debt, and we all know where it goes from there. So part of the work to start with, and this is why the way I teach what I teach. And so the way money's more or less taught out there is that most of the focus when we think, especially as business owners, so much is spent, so much time is spent on talking about income, how to increase your income, how to make more money, how to produce more revenue streams, but it's all on this income side. And it causes us to think, or conscious or unconsciously believe, that to build wealth, to set up our financial situation so that we have a healthy financial situation, we need to focus on making more money. It's an income game. And it's not. It's a myth. It's a misconception. It's a false belief. It's a false understanding. Whatever we call it, it's that belief and that tendency then to focus on making more money, that, and not to focus on the leakage, if you will, that's keeping us from having a really stable, secure money situation where money has zero tension or very little tension in our life. So it's not about the income. It's all about spending. We make our wealth. We build our wealth. We grow our net worth. We build our freedom. We build our security, our stability, financial stability, our financial wellness, whatever label, name we want to give it. It's all on the spending side. It's not on the income side. So it's all on the spending side. So the first thing we have to do, the reason why I teach personal finance before getting to the business finance side, is because if we make more money on the business finance side and we put it into a leaky personal finance, a leaky spending, personal, like all of our personal money, if it's leaky, meaning we're not managing the expenses and there's money going out that we're not counting, we're not accounting for, then no matter how much money we make, it will all leak out and it will sink the ship, no matter if it's a small ship or a big ship. A small ship meaning lower incomes and a big ship meaning higher incomes. So everything I teach, and the reason why those of you that have been now through the money transformation course and now part of the coaching club, the reason why I spent all the time on the personal finance side, which is what I call the bucketing part of the cash flow method, is we have to fix the leakage. We have to get our spending in order. We need to set up our buckets. We need to organize and categorize our personal finance first. Because, like I said, I'll reiterate, if we make more money on the business side, but it's a leaky system, or we're not bucketing, we're not accounting for the personal, we're just working harder, we're more stressed out, we take on more expensive, it becomes, the more money we make, actually becomes more stressful than less money, because more money we spend and we just get on that hamster wheel, we get stuck, and then you get in more debt and you have to worry about more higher income, and it's a really stressful way to live. And it's where most Americans are. We're just on that financial hamster wheel and we cannot figure out why, because our incomes are going up or this or that, and we're like, why am I on this hamster wheel? And that's the reason why, is we're not focusing on the leakage on the personal finance side first. So this is how it works. These 3 slides. So there's basically, in the cash flow method that I teach, there's 3 distinct parts. And one, the left-hand box there, which is the business side, that you see a number 2 up top. That's the second thing we focus on, but that is about business finance, how to increase our income, how to produce more revenue streams, how to build our profits, that sort of thing. But you see number 1 is above the bucketing system. This is where we start, because we have to make sure our vessel's tight, that our personal spending is all organized, categorized. We have our cash flow all flowing through. We know our formula. And that's the 3-part system that you all have been learning, starting with the cash flow chart, setting up your buckets, and then moving towards identifying what your current spending formula is. And obviously our goal is to move towards the 20-80-20, which will be the ideal formula. And then you see number 3 there, that eventually we'll all get to part 3. Some of you have already started there, but depending on where you are in your journey. But part 3 is the balance sheet side. This is the personal balance sheet, which I call balancing, where this is the growth side. This is where we're looking at our investment bucket and how to really optimize that investment bucket, how to invest, how to grow that, how to produce multiple returns on those investment dollars. And I teach that piece really through my mastermind workshops, like the one I had a few weeks ago. So that's a little bit higher level, and I tend to do that with my personal clients that come to the masterminds and part of my my personal coaching clients. But that's something that just know as we work on this together, eventually we'll start working on the balancing piece, which is the true wealth building side. But wealth will never be available to us to grow if we don't master our bucketing system, number one, and then two, start learning how to manage our business finance, which is step number two. So that's our next question. How's your personal finance going? How's your bucketing? Are you bucketing? How's that going for you? How's it been working with Whitney? Are you feeling more confident with your money? Are you having maybe a little bit more fun? Or has it been a challenge to really turn this into a practice? I'm going to keep repeating this because I cannot emphasize it enough. 80% of our financial wellness is all behavior driven. 80% of it. So we really are our behaviors and those practices, those behaviors we have around our money, 80% of them is in our hands, is how we organize our behavior, our time around spending time on our money. And then 20% is learning. You guys are doing the learning, you're here. So that piece is covered. You've done the money program, the mastery program, you're in the coaching program, so you're in the learning. So congratulations, and we'll keep learning together because this is a journey of learning. You can't just learn money in a day. You can't just learn it in the 28 days, as many of you have already figured out. But it's really the 80% is how do we change our behavior or adjust our behavior to be in our books, to count our money and feel good about it. So that's the bucketing, as I said. We all know, we've learned this, that the bucketing system's 3 parts. It's learning the cash flow chart. Remember the chart of accounts and how we break all of our spending down. Then it's moving it into the buckets and setting up our buckets, our different bank accounts and automating that. And then finally, it's working in the financial calculator that you all have and using that calculator to really manipulate and adjust and try to figure out what is the right formula for you over the next maybe 6 to 12 months to help get your money in better spending order, moving towards the ideal of the 20-80-20 as the ultimate guide, where we really then, when we get to the 20-80-20, that's the formula for wealth building, which means that our buckets then are really going to start to be, we've reorganized our finances and our spending in a way personally that then our different buckets really can grow, that actually puts us on the path of financial wellness and wealth building. So I'm not going to go into this, but I just want to show and reiterate that everything starts here. So this is the first phase of mastery. That's why we call it the 28-day money mastery program, because when we master this, the rest of it becomes really easy. So that's the first step. And just kudos to you for taking the step, going through this, hanging on, showing up to this training, because you know there is something to learn, and your dedication and commitment tells me that you're on the path to true financial wellness and financial wealth. All right, so now I'm going to dig into some numbers here, and we'll see how this shows up on your screen. Sometimes it can be a little bit difficult to read some of these financial statements or smaller print, depending on the size of your screen. I work on great big screens, mostly because I'm getting older and my eyes have trouble reading fine print these days. But anyway, you may or may not be able to see this really well, but I'll talk you through it regardless. So what this statement is this is your personal flow chart. So we're looking at this, and now I want to show you to pay attention. Now you want to start to really pay attention and watch the slides, because what I'm going to do is I'm going to walk you through how the money flows from here to here. So here we go. So on this, let's pretend we've been bucketing. And so we're bucketing in our personal financial statement, in our personal, whatever label you give it. We call it our cash flow chart here at Wealthy with the Mindful Money program. But if you call it your budget, your Quicken, your Mint, whatever you call how you manage your personal finances. And in your personal finances, it has to look something like this. Like if you don't have some sort of accounting software and some sort of chart of accounts, you're never going to be able to manage your money. So again, all of you that are part of the Mindful Money coaching program, you've already have this set up. But as a review, the first thing here is looking at this again. We've not even touched the business finance side. This is to look at how things flow. So hopefully by the time we get to the end, it'll all start to make sense. So here at the top, this is your business income. And let's just pretend it's $68,300. And I'm going to show you in a second where that comes from. But this is your business income. So this is from your real estate business. This is how much you're bringing home. Let's say at the end of the year, we've looked at all our books. This is an annual spreadsheet. This isn't a monthly. Although you could use the same numbers and make it a month if you wanted to. So it'd be a good monthly number. But your business income is $68,300. You see this right here. Now let's just say your spouse, your significant other, brings in another $50,000. But that's W-2 income. So your business income's here. It's the $68,300. It's not W-2. This is business income. And it's what's left over from your business for the year that you pull over to your personal financial statement, your personal income and spending account, your cash flow account. So this is your $68,000. Now let's say your significant other brings home $50,000. So you have a total household income of $118,300. That's with both. Now your partner, your spouse, your sig other, we're assuming that you're pulling all your money together. And then this comes directly into this. This is his take-home pay and putting directly into the personal account. So it gets dropped in personally, but you're bringing in from your business. So you're pulling this over versus it necessarily being automatic. Total household income is $118,300. So now we need to set up our sweeps. And this is our above the line sweeps, and that's ATL above the line and sweeps. So I want you to take note here. Look at this. This is just like cost of sales in the business spreadsheet. So what you're going to start to notice is that the personal finance and the business finance, we use different accounting terms. They do. We've adopted this distinctions, terminologies, and business names. But really, business finance and personal finance, the names are different, but they look almost exactly the same. That's why it's easier than you think. So back when I started learning business finance, that was my big aha, like, oh, this is the same as personal finance. It's just called different things. So we call this in the personal side, the above the line, and it's just like the cost of sales on the business financial statement, profit and loss, that I'll talk about in a minute. So the total amount of these is $36,000. That is meaning we're taking $13,000 and putting it into our tax bucket that we owe out of what we took from our business income. Then we have our two wealth investment buckets. Our wealth is $6,000 according to our formula, and $17,000 according to the formula, to leave us a gross profit of $82,300. So that's our gross profit for our household. And what gross profit means, that's a business term. So we don't usually use that personally, but I'm keeping it consistent so you can see how these two spreadsheets look almost identical. But what this means, just personal, just like in business, this means we get to spend $82,300. This is our spending cash. So again, those of you that are going through a program, this is our spending allowance, our spending cash. We can't spend this money because that's not our money. $13,000 is Uncle Sam's money, and this $17,000, the $23,000 here is our future self money. So our spending allowance is the $82,300. And then how do we break up that spending on our personal statement? One, we have our living and luxury bucket, and I've done the spreadsheet here just according to the formula, the ideal formula that I teach. And remember, this is the 20% here. So this 36,000 is the 20% of the 118,300 minus the taxes. And then down here, it's the rest of the formula. So remember what percentage goes towards our living and luxury bucket. Remember, it's 80% of the 82,300 of the gross profit. So the 65,000 840 is 80. This is what we get to spend in these two buckets, our living and luxury bucket, which is 80% of the spending allowance. We get to spend, according to the ideal formula, 80% of what's left over of our spending allowance. And we're breaking that up where we have this budgeted for our living expenses, and we get to spend this much, or we spent this much if we followed the formula on our luxury expenses for the year. The next savings bucket, or the next bucket or categories are our savings buckets. Remember our reds buckets. We have our rainy day, our education, and our dreams for a total of $12,000. And remember, how much is this? This is 15% because we're doing 5%, 5%, 5% of the 82,300. So whereas we sweep this year 4,100 into our rainy day, 4,100 into our education, and 4,100 into our dreams bucket. And we have some debt paying off, so we sweeped $4,100 into our extra debt payoff to pay that baby down for a total of 20% here. So remember, 20% above the line, 80% living, and 20% between our savings and our debt payoff bucket, which is 5, 5, 5, 5. So most of you know this. I'm going over it pretty quickly because hopefully by now you can follow me. If not, no big deal. You'll have all of this by the end of your coaching program. But as a review, so this is how our personal books look. So we spent basically 65 that we in 2016, in this case, we made 118,300. We sweeped money off the top for business income for Uncle Sam. The rest of it was taken off through the W-2. We put away 20% for our two investment buckets. We had 82,300 left over. Then we spent 65,000 on our living and luxury buckets, and we saved $12,345 split up between our three different red buckets, and we paid an extra $4,000 towards our debt payoff. So hopefully maybe the debt's even gone. So that's it. That's how it all breaks down. I wanted to just give you a very simple review of your personal finance book so that you can see now how it's going to relate to your business finance books. So what I want you to look at here is the 68,300. This is each of you that are on the call. This is your business income. That's where that number came from. So again, look at it here. My business income is at $68,300. So the question for you here is, where did that come from? The $50,000 from our spouse, that just directly hit these books because it's W-2 and it just goes directly into the personal account. It doesn't go into a separate account. It drops directly into. So that's easy. But where did our business, where did this 68,300 come from? It does not drop directly into our business. This is where, if you co-mingle your accounts, this is where you want to pay attention, because if you co-mingled it, this would be a bigger number. I'll show you in a minute. And then you're trying to manage your business expenses down here below in our spending categories, and it gets really confusing, and it throws all the percentages off in numbers and really messes with our accounts and makes it really hard to manage our business effectively, because then our business spending is part of our personal spending. It's co-mingled monies, and it's really hard to account for how well am I doing in my business? How is my business doing financially? And because it's just all wrapped in here, and like I said, very hard to manage. And it's just not, remember our goal is to get to that third part 3, that wealth building side. As business owners, we have real control over our income. So that's the great news about it. But you cannot grow your business income year over year and grow that profit and truly make more money if you co-mingle. So there's a takeaway. Like, if you really want to move the needle on your business income, you have to look at your business finances separately. That's just a rule, and it's just part of it. So if we're in our business and our money and we don't know if we're making money or losing money, and it's all it's all mixed up in our personal finance, and we feel like we're really working hard and we're not making enough, I'm guessing for most of us in that situation is because we don't have 2 sets of books, and we're not doing what I just showed you with our personal finance, and then it's probably even worse or completely non-existent on the business side. So anyway, look at this number. It's my business income of $68,300. So that's where we're going to move over to the second part of the total cash flow system, which I call Flow to Freedom. and look at our business side. So now we're going to look at our business books. So my question for you here is, do you have a business P&L? Now, a business P&L is just one of the financial statements that we typically want to manage out of. We need a business balance sheet and we need a business cash flow statement. But that's really like master your revenue and expenses first. So once you master your P&L and you've got a really good practice for looking at these numbers and flowing your money through this, then we want to start looking at, especially in real estate sales, your accounts receivable that are on your balance sheet side would be your future commissions. And, you know, there are a couple more added layers of complexity. It's still pretty simple because we're just managing a few, you know, revenue streams and a few different things. But ultimately, if we're going to get over that true wealth building side, we're going to have to get, you know, decently good at this. You don't need to have an accounting degree. It's actually pretty simple. It's mostly behavior. Again, a little bit of learning and mostly behavior. All right, so now this is your business P&L, and this is what it looks like. So in this case, I'm breaking it down here, and I just made up a scenario, but we have our sales revenue for the year. And now this is $100,000 in this case. And this, if you're in real estate, it's your gross commission income. So your total commissions would be rest up here at the top of the chart. And that's your sales revenue. So sales from your insurance income, you might break it up into for if you own an insurance company, for example, maybe you have your new sales revenue for new clients, and then you have your residual income for the month or for the year from your past policies. So you want to break up maybe your revenue in a few different line items here. You know, you could put it all together to start with, but essentially once you start counting your money, you want to look at where's the different money coming from, because these are all different levers that you can start, you know, moving up and down intentionally once you see how all your money's broken up, and, you know, see where's, you know, am I making more money out of residual than I am this, or is there a tipping point? There's all sorts of questions you'll start asking yourself and looking at once you get really intimate with this. And again, it gets fun because you realize you have a lot more control over this than maybe you think. That you don't have control when the answer is I just need to work harder, sell more houses, and make more income, and everything will work itself out. If that's a belief system, either stated explicitly or believed implicitly, it will never, ever get ahead of this thing. We're always going to be on that hamster wheel. So anyway, we don't want to think that. We want to understand that we're in control, not just by working harder and trying to sell that extra house or buy that additional piece of technology. They say, well, you know, the magic penny, if you do this piece of technology, buy it, it'll change it, you know, change everything for you, get you that new lead. It's like, who cares about the new leads? We have to manage our spending and understand our books before we ever get to, before we ever even start spending money on leads. We have to understand how our money is flowing and spending it and have some accountability for it before we buy leads, for example. All right, so I'm going to let you guys look through this. I'm going to look at some, so Anne, no P&L. Sandy, no P&L. Karen Loke, why, yes, we do have a P&L. Yay, Karen. How was your trip to Montana? Are you still in Montana? Looks like you're having a good time. Yes, I have a business P&L. Great, Brenda. Let's see. Yes, I use free software called Wave that does everything. Excellent. I haven't heard of that. I might check into that. And let's see. Is business income on this chart a gross income figure? Yes, this is gross commission income or gross income. So great question, and you'll see how it breaks down in a second. Let's see. iBucket, let's see. Oh my goodness. My sister and I just pay ourselves a portion at the end of the year from our rental property account. I need to address that one separately. Brenda says, like Janine, having a consistent salary and being able to plan for future as a commission-based realtor. Okay, so those are some of the issues. All right, I'm going to come back and I'm going to review these questions one by one because all your different comments are mixed together. So I will address all of your questions at the end here. I do have a question here that says, what's P&L? So thank you. The P&L is profit and loss. So on the personal side, it's really a profit and loss too, but we don't call our personal income profit or revenue. We just call it income. So we use different names for it, but But on the business side, P&L means profit and loss is the name of the financial statement. But basically what it is, it's our income and spending statement just for the business, just like our income and spending statement chart of accounts for our personal side. So, but anyway, yeah, P&L, that's just the financial term for this specific business income statement. All right, so consulting revenue, let's say we made sales revenue, let's say we made another consulting revenue for whatever business we have, or we got some good referral revenue coming in from those real estate referrals from around the country. Let's say you sent some good referrals to Good Life Realty in Austin, Texas, and we wrote you some big checks. But anyway, and then maybe you have some other rental income or something that you want to put on your business books, all running through your real estate business. So this is all of your income from your business, basically, for 2016. Now here is this word called cost of goods sold. So cost of goods sold is, remember, that's the same as our above the line money that we're taking out of our spending allowance off the top. And so what is cost of goods sold? And cost of sales, cost of goods sold is an accounting term. And just like on the personal finance side, we need to take those above the line, what I call those personal cost of sales, out of our spending ability. We have to put them out of their accounts. We have to move that money right away because it's not our money. Remember, it's Uncle Sam's money, and it is our future self's money. So same this isn't our money, because with sales, with sales revenue, there's always a cost of a sale, meaning a direct cost to that sale, like a direct expense attached to that specific sale. What that means is that we don't get to keep the full amount of the revenue because there's a portion of it that's already been spent with the cost. Let's say if we produce things, we might sell, let's say if we sell cosmetics and say we sell $100,000 worth of product, of cosmetic product, but it cost us $20,000 in this case to produce it, meaning it cost us 20 out of the 100 to pay the suppliers or whatever to create the product. So what that means is we don't get to keep the full 100,000. We paid 20% to create it in the first place, to manufacture it. So that's a cost of sale. It's the cost of that sale. So it's easier to ascertain that when we have a product. You know, we know, okay, the cost here, the widget, I sold this widget and it cost me this much to make the widget, and so I get to keep this much left over. But that's what a cost of sale is. So in this case, you'll see the widget cost, or what's the biggest cost of sale for real estate? It's your broker split. So most of us, just like with taxes and a W-2, we get used to living what's left over after Uncle Sam's cut's taken out. But really, to be truly financial prudent, we always want to pay attention to how much we're paying Uncle Sam. Well, in this case too, that many of us just get used to living off what's left over after our broker takes the split. But really, when we're looking at counting our money, we want to pay attention. What is that cost of sales? So if you have, $100,000 check, but you're on a 15% split with your broker, then that 15,000 comes off the top and goes to the broker. So it's really important to know how much you're paying your broker in this case, and just to monitor that. And then you might have another cost of sale that there's your packaging cost or whatever that would be attached to that sale. Let's say in the cosmetic example. In the real estate example, many of us have transaction management fees. So for example, we pay the broker, our broker split, and we pay a transaction manager maybe $300 to close out that sale. That's a cost of that sale. So we have to take it out and manage that. So in this case, let's say we had $5,000 of transaction management, $15,000 towards our broker split, to give us a gross profit of $80,000. So that's what our gross profit is, of $80,000. Now, how much was our gross profit on our personal side? Maybe just take a look at that, and you'll start to see how these are similar when you line them up side by side. But you'll see, again, you're going to see how simple this is. And so now we have to look just like on the personal finance side. Remember, we broke up all those different categories into our living and luxury. We have our savings, we have our debt payoff all below the line. Those are our different spending categories for our personal side. Same thing on our business side. Now we need to categorize our business expenses. And I've broken these down into what's mostly for those of us with small business. These are the categories of our business expenses. And so in the chart of accounts, in your spreadsheet or in your accounting software, it should look something pretty close to this. You have your advertising and marketing. So you want to pay attention to how much am I spending on advertising and marketing. And you want to even know when you get better at this, you just like on the spending side, we have our formula. We need our formulas on our business finance side too. So, when we get deeper into this, I'll give you some formulas, but basically we want to make sure that our spending really matches the formulas, that again, a formula based on our above the line. So then we have, our advertising marketing. In this case, we had internet ads of 2,400. We had our business cards of 1,000. Now we have technology, phone, internet, website. We have 600, 250. Education is really important. The great thing about when you're set up as an S Corp, for example, it makes it really easy to write off a lot of expenses. So you have your education bucket that's in your personal side, but you can even have one also in your business side, or just run it out of all your business. So it's really easy to write off. So this is your education category. So because you can write off all your education, this is everything you get to write off basically for your business. So maybe you have your coaching, that's $1,000 a year. Here's a tip. You have to have coaching in your business if you're going to grow your business, be held accountable. It's just impossible to do it without coaching. So those of us that have high incomes and are building our wealth, we have coaches, lots of coaches. I've always had coaches. So you need something in your coaching line item here, and it's better to put it in your business side when you have a business as opposed to W-2. Now, the reason why education's on the personal finance side is because if you don't own a business, all of your income and expenses is flowed through your personal finance statements. You need that education bucket. When you have a business, though, you can run it all through the business, so you don't even necessarily need that education bucket, on your personal finance side, or maybe you don't need to put as much, but that's a different conversation for a different day. I think the takeaway there is you can manage it different ways. Once you get good at this, you'll figure out what's the best method for you. But really, on your business side, you need education. You've got to have some coaching. There's always some dues, training like what you're doing here. You could run out of business. You have conferences you go to. But education's always been a really, decent spending item for me, because I'm very much convinced that my income and wealth building ability and business ability is directly correlated to how much education and training and networking and conference attending I'm going to. So then maybe we have a rent or desk fee. In this case, we don't. Maybe we have some mileage we're writing off, auto expenses we get to write off. We have some meals and entertainment, some client lunches, client appreciation party. We have some travel for those conferences. So all of this, those are all the expenses. And so when we take out, so here we had this we had this revenue here from our business, take out our cost of sales, our spending cash is $80,000. We have all these expenses, and that takes us to the place of here. Once we take out all the expenses, how much do we have left over from our business? Our profit is $68,300. So the profit from the business is $68,300. Now, what number does that match? That's how much we put into our business income. Our personal finance here from our business income. So that's how it works. We have our personal income of $68,300. I don't know why this is doing this. And then it matches exactly what we did in our takeaway here from our business. So hopefully you follow that with me jumping around a little bit. But the takeaway here is that the income that came from on our personal finance statement here, I don't know why this isn't, here we go. So the personal finance, this here, this is our personal flow chart. This is a business income of $68,000, $68,300. Came from where? It came from our business income statement of right here, the second part of what's left over down here at the bottom. So do you see that this is the flow from personal finance, then looking at the business finance, we take our profit from our business, then we move it to our personal side. And again, it's right here. It shows up right here. So the takeaway is you must have two sets of books. You must have two sets of books. If we're going to own this money thing, if we're going to be true business people, small business people, business is small, it can be big, but if we're going to be business people, the great thing about business is when you own a business, grow a business, know how the money works in the business, you can control more of your own levers than you can outside of it. But the problem is that the only way to really manage your life and grow your business and to live the lifestyle that business ownership can provide and some of the freedoms that it can allow, you have to get good with the money. You have to get good with the money. So it's almost better if you're not, for many of us, if we're not going to really, we don't want to learn the business finance and we don't want to change our behavior or be in these practices with the money, it's almost better to take a W-2 income. We're going to make more money at the end of the day. And that's the truth that most people won't tell us. They're just say, go business ownership and go be an entrepreneur and go make more money. And business ownership is where it's at. And it may or may not be. But what they're not telling us or telling you is that the only way to truly use business to grow our money, to build financial freedom outside of what we can do with our personal finance, with our W-2 or with our, our guaranteed income. When it's unguaranteed business income or commission income, we're forced to manage that money, account for it, count it, watch it, get good with it, because otherwise you're just on, I need to sell another house to make enough money to cover my bills. And that's even assuming that you have your bucketing system worked out. Now, the bucketing system will really help take away probably 60, 70% of the stress, even if you don't manage your books separately on the business side. But it's still going to be stress because you're not going to know how to design your life or your life inside your business or with your business to be able to truly control it. You're always going to be at the mercy of sell another house, sell another insurance policy, sell another widget. And it's a really stressful way to live. So all of that sums us up to get to this place. I'm going to get to our questions now, but to see these three different parts. This is really important to embody that it's three levels of knowledge, understanding, behaviors, and practices. Everything starts with the middle piece with the bucketing. You're doing it. You're getting it. You're in it. You're feeling how uncomfortable it is. You're probably feeling really stupid sometimes. And other times you might feel like really, when you have these little successful moments, you feel really great about yourself. But that's part of the journey. Just feel it. Feel the frustration. Laugh at yourself. You'll get better with it, like everything, over time. And we're here to guide you through it. Once we have the leakage fixed, so we don't sink our ship, and that's all through, and we have our bucketing set up, then we move to the business finance side. And now it's time to start setting up a separate books, start breaking it down and looking at our money, and just very simply starting to move into looking at our business money and then how we move our business money over to our personal side of the equation. So then eventually like I said, we get to balancing, which is all the investing, net worth, balance sheet side, the asset side. And that's where we use what we're doing in the first two categories here on the business finance and our personal finance, and really moving it over. How do we leverage both of those to build long-term wealth, asset value, net worth? And that's a whole nother game. It's a whole nother side of strategy. But again, there's nothing there we can play with if we don't manage the first two pieces first. In order to, the goal always, what we're doing is we want to cash flow our money from one to the other to finally reach this place of financial freedom, like really. So here's the big takeaway. If we want to build wealth, if we want to build freedom, wealth affords freedom, and we want to do that through business. This is a rule. It's a requirement. There's no exceptions. We have to watch our finances like a hawk. We have to want to, we have to get good at, we have to do it. When we don't want to, it's like exercise. To be fit and healthy, optimally healthy, exercise is part of the equation. And I can tell you, most days, if not all days, I do not want to exercise. Exercise is part of my life. I do it on a regular basis. I have trainers, I run, I do my different things that I do. And I can't say I ever really want to. Sometimes I do. Sometimes it's perfect weather and I'm just in the mood and I can just go out. I'm looking for a run and run forever. But that's the exception. I exercise even when I don't want to because I want to be optimally healthy. And it's a requirement. There's no exceptions. So our money's the same way, is that I'd much rather probably spend some of my time playing around, tinkering around, doing anything but in my books. With Gary and I, there's lots of things we'd rather be doing than spending as much time in our books as we do. But it's a regular practice. It is part of our marriage. It's a vow of our marriage. And it's a conversation. You can see we have different businesses. So we spend a lot of time watching our finances. But it's certainly a weekly practice and conversation every Saturday morning. We sit down. On rare occasions, it doesn't work that way because life doesn't work that way. But most every Saturday morning, we sit down and we go through and look at all of our numbers together. And then at least on a monthly basis, we're really into it. We're reconciling. We're looking at all the business reconciliations. We're moving monies. We're looking at our personal buckets. We're checking everything out and making decisions accordingly. But it's fluid. It's active. It's constant. It's never done and you put away and you never worry about it. Certainly automation pieces, but the more active you are with the money and the more you watch you count every dollar, every penny, that's the secret to building your business, your personal, and your overall life wealth. All right, so we're going to get to questions now. So are you all ready? We're at the top of the hour. I talked a lot to try to really squeeze in the learning to an hour. So now I'm going to spend the time it takes to really try to dig into some of your questions. I know that's a little bit hard probably to follow on a webinar format. A lot of this really just has to be taught face to face for people truly to get it and to write it down. But obviously this is the best we've got right now. So let's see. So in June's cash flow calculator, I've included business expense. With this business chart, income expenses now done separately, then put it into our cash flow chart. Yes. So, Anne, let's see if I can open my marker here. So yes, so in your cash flow calculator, ideally you don't want to include your business expenses there. So in your cash flow calculator, remember, here's your personal finance. And I'll write on the board what I just shared with you on the slides. So you have your business income basically. In this case, it was at $68,300. So what you want to do is you're going to have a separate account here, and you're going to have your income, it's called revenue, or let's say commissions, gross commission income, whatever we call it, here. Then we're going to take out all of our business expenses here and itemize them, maybe a little bit like what I showed you on the graph, and we can send that out to you. So if you want those chart of accounts, my team will send them to you if they'll be a good guide for you. I created them like in 2 minutes. So anyway, they're really good guide, but clearly they're not going to be as deep as you probably need to fully look at all of your expenses. But you have your business expenses, and then down here you have your $68,300. This is called profit. That's why it's a profit and loss, because it's a profit. That's what you're going for here. But if you're making $100,000 in your revenue, but your expenses are 110,000, clearly you're going to have a loss of $10,000 or whatever it works out. So that we don't want a loss. So it's called a profit and loss because in your business, it's not always profitable. So we have something over here I'll talk about another day called retained earnings, but this is our separate bucket over here that we put money into so that if we do have a loss, we use the money in this what's called retained earnings or this loss bucket, if you will, to cover us when months are maybe at a loss, especially when those commission dollars go underneath. So that way it doesn't touch our personal books over here, which this is a good tip, is you sweep some money. You can sweep money off the top here and do this loss bucket to carry you during these months. So you manage all your profit and losses here so it doesn't affect your books over here. But when there's a loss here, you might have a zero on net income for that month. But ultimately, in this case, to keep it simple, we have our $68,300 that's moving into our calculator, and then our calculator will go out our above the line, and then obviously our living in luxury, our rainy day, and our debt payoff buckets. All right. So we send the slides out so I can see. Cheryl says we send the slides out so I can see all of the business income statement and the numbers go together. Yes. So we'll send you both the statements I made up. So I've created those very quickly as an example. They're not going to be everything you need, but hopefully at least you can look at those and compare them to what I talked about to get a better understanding. But yes, we will send both those out to you. Jessica says, do you move the income over before business taxes are taken out? So yes, in my case. So that's a really good question, Jessica. And our businesses are set up as S corps. So basically what an S corp is, it means you can flow all of the income from your business, you flow it into your personal, and then you pay your personal taxes. So you don't pay corporate taxes at all. All of what's left over here moves over here and you get taxed. So this $68,300 from my business, if my tax rate is 25% or whatever it is, I'm going to take 25% of that to put into my tax bucket on my personal side, because that's how S corps work. It's why I like S corps, because it's very simple and it allows you to have a corporate setup, which you want, because the IRS doesn't like us trying to manage business expenses out of our personal account. It puts us as a target for auditing, and nobody wants to be audited. So and the IRS knows, like, there's a different set of financial responsibility when people have their corporate books set up, and there's an assumption there. So less likely is my understanding from my accountant that, to be audited, but just good financial practices. But that's why an S corp. So S corp, obviously we funnel all of our business expenses through there. Sometimes we have a few business expenses that might touch our personal books that we'll write off, but then you're trying to manage and tell your accountant all these write-offs. We just manage almost everything out of our business accounts for that reason, for simplicity, less to manage, less to get lost, because we want all the tax deductions we can get, right? So anyway, that's where the percentage of the taxes comes off here on the personal side. It's a really great question. So Jessica says, where do bridge tolls go? Under auto expenses. Yeah, if your tolls you're associating those with your business, and you tend to write those off, you put those under auto expenses for sure. And then Jessica says, do business cards always go under marketing? Probably. Again, these are guides, and so that's a really good guide to start with. And then once you really get in with your books, what's naturally going to happen, you might have your own situation. I'd really like to keep track of that, my business card spending or whatever, with my, I don't know, office expenses or something. I don't know what it would be, but you'll determine how you want to categorize your expenses, because why are we categorizing them? It's exactly the same as our personal side of the equation. Most people lump all their spending, all their expenses together. They're not categorized. And so what happens? We can't look at the different categories to really, like that hawk, be looking at, how am I doing with my spending there? Am I overspending? How am I doing? We have to break our personal spending. The reason why the bucketing system works is because we categorize our spending to make it really easy to see it, observe it, change it, modify it, grow it, reduce it, whatever it is. It's impossible when you lump everything together. The exact same thing with our business expenses. If it's just all lumped together, we can't keep track of how we're spending, and we then can't hold that spending accountable to making more money. So we want to know how much are we spending towards marketing and lead gen, because if we're spending 50% of our total income, that's way too much. Like, we're not going to have any left over probably at the end of the day. So if we know that it's way too much, then we're going to look at our money. So what's my best spending when it comes to marketing? What produces the biggest return? True new business or brand building. And we may knock off 6 expenses and get rid of all that BS that we've been sold, by all the experts out there that tell us we need this new lead generation system to make more money. It's like, screw that. No, I'm in charge. I'm going to look at my marketing. I'm going to look at these expenses and determine what's the biggest bang for my buck. It's my money. And then when you make more money and start growing, then maybe you add another line. Like, I really want to, now I can see I have all my spending, my marketing spending. Now I really want to move another lever, so I want to spend a little bit more to try to generate more revenue. But it needs to be attached. The expenses have to be attached to the revenue, if that makes sense. So again, when you get into this, it'll start to be a little bit personal. So you'll see, okay, I manage my money this way, or this is how I spend it. So I'm going to move this line item expense maybe to another category. But business cards really is going to be in marketing, advertising, brand building that I clump together. So let's see. Cheryl says, will there be an online calculator for the business income statement? That's a good question. We may do that later on. Here's what I'm doing, Cheryl. Actually, well, let me back up. I'm going to be writing a business finance course, just like the Kashflow system. So your mindful money system that you're learning for your personal finance, you master that. Set up this chart of accounts like I've shown you and start to get your feet wet on the business finance side according to the way I'm teaching it. What I'm going to be working on in the next 6 months or so is a true business finance 101 course, which you will have your calculator and these different statements broken down just like we gave you on the mindful money course, but we're not there yet. So I wasn't actually intending to teach business finance, nor was I intending to write a course, build a course. But because there's been so much demand for it, I'm going to go ahead and do that. And especially when I'm looking out in the marketplace, there's really nothing out there for any of us to learn this, a very simple system and some teachings to help us really learn how to manage our business finance directly attached to personal finance. I couldn't even believe there's nothing out there. I mean, there's nothing. I looked all over trying to think there might be somewhere to direct all of you to help you out, because since I don't have anything for you yet, and realized like, oh my God, okay, I will do it. So anyway, give me some time. And in the meantime, through the coaching program, that's why the coaching program is there. I wanted to introduce you to this so you can see like big picture how it works and start to get your, your arms around that. Like when we can see things, then we can make change. But when it's all convoluted or we don't have any real picture, it's really difficult. So that was the goal for today, to introduce the big picture. If you're in the coaching program, I'll spend as much time as you guys need between Whitney and me really walking you through this. So that is part of what we'll deliver before I have the course, that all of you that are currently in the coaching program, I'll make sure that we'll help you out there. All right, do you have an account for Social Security taxes? So yes, that comes out of the payroll section. So let me see if I can find it here. It's here. I didn't put it on here actually because I assumed a lot of us wouldn't have salaries to pay. So what's not on these business expenses is salaries basically. So what you do if you have for yourself, if you pay yourself a salary or if you want to take it out of your business. But in all my businesses, I have salaries, I have staff. So one of my biggest expenses is salaries. So it's salaries, it's unemployment, it's Social Security, it's all the business related expenses attached to that one salary, but they're all different line items. And it's a big portion of of all of my businesses is the salary expense. And like I said, all the additional business charges we get charged as a business owner that most employees don't even know what we have to pay to keep them employed just for the government. So, so yeah, that's all categorized. And it's another measure, things you start to measure. Sometimes we, I always hire before I really have the money for that person, but I try to get ahead of it. But I have to watch it, because if your salary slash staff expenses are too high relative to your gross profit, then that's why businesses let people go, because you'll go out of business if your salaried expenses are too high proportionally to the gross profit number. So that's why you're measuring these things all the time. And most business owners don't want to lay people off. I mean, it's not a fun thing to do. And usually small business, you love your employees. I mean, the last thing you want to do is lay them off. And so, but that's just a requirement as a business owner. If you don't have enough revenue and then enough, gross profit to be able to afford to keep that person on payroll, because payroll is really expensive. It's not just, if it were just the salaries, payroll would be pretty easy. But when you have to tack on all of the additional taxes and, like I said, unemployment and all the rigmarole that the government requires, and then you put on some stipends for health insurance or built-in health insurance, the cost per employee can get very high. So it's really important to monitor. So Jessica asked, what accounting system do you use? Gary and I use QuickBooks, but we use QuickBooks because we manage a lot of money and we have a lot of different accounts. And so it's a pretty sophisticated accounting system. For most of us, Quicken is probably good enough. And, there are other ones out there. Quicken's good because it allows you to at least customize the different categories, so that some of the other off-the-shelf programs don't allow you to do, like Mint and others. They're decent programs, but they don't allow you to change your own categories and really organize your money according to the flow system, which can make it very difficult to use that software and follow our program. But that's another thing I'm working on in the future. Hopefully in 2017, we'll have our own software for you to make it really easy. But I have to find the right technology partner to do that. So if you know anyone. All right, so Ann says, I'm applying for a HELOC and lender is asking for a P&L statement. As I don't have one, this webinar is timely. Thank you. Excellent. So you can easily create a P&L, by the way, for your lender. So anyway, you'll just have to go back and start working some of these things. You can more or less, you could ask them for a P&L financial statement that they might want you to use. That could be a really easy thing if they want to look at it a certain way, or you can use the spreadsheet here and start plugging in some numbers. But that's a really good point, by the way, that if we're going to get different types of loans, business loans, lines of credit, banks always want to see a financial statement. So Gary and I run lines of credit, and we borrow from banks for different business loans, and we buy real estate through banks. And believe me, we wouldn't have access to that type of bank capital, lending capital, without having very clean books and showing the money and how we're financially responsible, because the bank wants a guarantee that we know how to manage our money. When it's a business side or like a big, more risky loan, they're not going to lend money. They might lend money for a mortgage, but they're not going to lend business money ever if you don't have a P&L. And you can show them that you have some financial prudence on your business side. So Tanya says, if we have multiple businesses, e.g. I'm a realtor and do real estate services, would you set up two books, or is it okay for me to mix them since they're similar? No, just one set of books. And I mean, I guess the question is do you have them set up as two separate businesses, meaning two separate S-corps, for example? Or do you just have one S-corp and you have a couple different revenue streams, which is probably the case. And that's what I would recommend, unless one, they really do both start taking off a life of their own and different employees and different expenses attached to different revenues. Then when you totally manage them as two different businesses, then yes, you would have two different books. But I'm guessing that you're not going to get there probably ever or anytime soon. So right now, you just on the, let me show you here. Actually, I'm on that screen right now. So maybe you, on your sales revenue, maybe you have your gross commission revenue from your real estate, and this consulting revenue, which you have there instead of consulting revenue, you would have whatever revenue it is from your transaction management revenue. So you just have these two revenue streams, and then you total those out. All right, so Cheryl says, do items like professional photography for a specific address count as a cost of sale? Yes. So anytime there's a specific cost attached to a specific sale, that's called a cost of sale. So transaction management, photography directly attached to that listing. I'm trying to think of other, any expense that's directly attached to producing that sale is a cost of sale, as opposed to the difference between a cost of sale and an expense is just that photography was attached directly to that sale, assuming it's listing photography. However, if you have photography taken for your business cards and for marketing and for your website, that's an expense. That's just photography that would go under marketing and brand building because it's not attached to a direct sale. It's attached to the whole business. So that you need to separate the two so that you can see how much is it costing me to produce every single listing sale. And that's why, again, I think this is going to become a little bit more obvious, but you want to look at and track and count your spending and how it's attached to the different revenues and expenses so that you can adjust and change as necessary. But you will only know what's necessary when you're monitoring this and inside your books. Say, Naomi says, question 2, I have my buckets set up, but I'm not yet in the flow of using them effectively. Well, congratulations for having your bucket set up. That's step 1. So again, congratulate yourself. Most people don't even get it there. So you're that much farther ahead than most. So now really, Naomi, if you're in the coaching program, just make sure, like, check in, show up to the weekly calls. Just try to turn it into as much of a practice as possible. It gets easier very quickly. So it's for most of us, it's finding the time, but there's no more important time than spending time with our money. Spending time with ourselves and our money are the two most important times we can spend. And they're usually the times that we never offer ourselves. And we spend time doing everything else. Not time with ourselves, taking care of ourselves, and not time with our money. So Janine says, bucketing in process, continuing to grow, great awareness, and very much on top of my mind. Congratulations. Again, this is a journey. We're going to do this together. There is no magic pill. It's not like we just can get it and life changes. Like those of a, it takes some work, and it is a journey, and it takes time, and it is a process. And that's why I'm doing all this, because I want us to be in the journey together. Let's help each other. Let's celebrate each other's successes. Let's be there to support each other when any one of us has a failure, in no judgment, and just be in the Facebook group, be on the calls as a way just to, sometimes it's just a plug in to realize we're not alone, is a reminder, however we need the time. But remember, this is a community. And my goal is for all of us that it can be a safe place when we're in here and we're just in the process of growing and learning and becoming. This isn't about perfection either. There's no perfection here. You'll never get this 100% right. I'm continuing to learn things even in the money, and you know how much I'm in this and finding mistakes and so on and so forth. So I just want you to know there is no perfection. The goal isn't perfection. The goal is just mini progress, day over day, week over week, month over month. And really, the only true goal is to get comfortable with our money, to get intimate with our money, and to turn it into a practice and a lifestyle. Perfection not required. All right, so Karen says, my sister and I just pay ourselves a portion at the end of the year from our rental property account. So it just depends, Karen. If you're running your business separately, then you could put it, just like on this slide here, you could put it just as a separate revenue if you have, well, let me see. If you're paying yourself a portion of the year. So I'm guessing from your rental property account, I'm guessing that's what's left over. Your cash flow, that's profit that's left over after you've managed taking out all the expenses of managing the properties, the cost of the properties, so on and so forth. So if you have your rental property accounts, and you have a set of books for those, and then you're just taking a portion, maybe splitting up whatever the profit from those is, you can put that directly into your personal account. So that would just be an additional revenue stream in your personal account. As opposed to, sometimes we have rental income and rental expenses, and it's part of our business. So in that case, either treat your rental properties as their own separate business and manage it accordingly, or work it out of your business expenses so you can do all the write-offs and manage that through your business and not let it really clutter up your personal side. But it sounds like you have your business accounting separate on the rental properties. You're just taking what's left over and you just put that directly into additional revenue on your personal account. Tanya says, my buckets are more like cups, but they're there. They start out as cups. That's great. I love that. And then they'll just go to super size, and then they'll grow into buckets over time. But cups are great. That's because here's the reason why. It's not even the size of the buckets right now. It's to catch the leaks, right? So remember that we don't want leaks, and so we need the buckets to direct the flow so there's no leakage. And we don't know where the drips are going. It's catching those into places where we want to catch them. And as it catches those leaks, and we're moving the money intentionally into these cups, then it grows. And then the cup, you'll realize you need a larger cup and a larger cup, and the cup size grows over time. All right, Sandy says, I bucket and I love it. It's exciting. Yay, I'm so excited about that. Pat says, I love working with Whitney, love getting into my numbers, and have actually grown to love not spending, and better said, mindful spending, making sure it's meaningful. Oh, that's like music to my ears. And just that changes everything. So thank you for sharing. And Whitney, by the way, she loves working with you all. I mean, she just gives us so many reports, and I mean, heartfelt. She said, this is my life's work. I just love being in this, and I love my community. I love my members. And so anyway, it's a mutual love affair. All right, Jessica says, it's easier to organize pay. Is it easier to organize to pay business expenses on a credit card versus check cash? So Jessica, yes, for me, that we manage everything through our credit cards, and then it'll even now they auto direct, they auto deposit, like the expenses will auto calculate into the different accounts, so on and so forth, because the software is pretty intelligent now. When you link these up, that the money even knows, expenses know where to categorize. Now, it doesn't always get it right, so that's why you have to have a reconciliation practice every single month and go through every single, on personal and business. Here's the takeaway. You have to go through every single expense on your credit card and make sure it matches up to the category, the line item on your personal financial statement and your business financial statement. So again, that's where a lot of time is, at least on a monthly basis. It's almost easier weekly if you have a lot of expenses, but you have to go through every single charge on your credit card. And that never stops. I mean, Gary and I go through every single expense through all the businesses, and ask our business partners. I mean, they go through every single expense with Gary once a week, every single Friday. That's the business financial reconciliation day. And each team member needs to know, what was this expense? What was that expense? And they have to report. And sometimes sometimes things show up. And we're asking the whole team member, let's say on the wealthy side, Rachel will put in a message into our Slack that says, hey, did anybody spend XYZ on the credit card? And we're like, no. So then it's a mystery. Where did that expense show up? And many times there are these random charges that show up that we didn't spend the money. And then sometimes it was a mistake. And then obviously most times it was legitimate. But the point is that every team member has to account for everything that's being spent. But that's only pulled, it's only recognized through the weekly business reconciliation. So anyway, it's important to reconcile. But to answer your question, yes, we manage everything through the credit cards, which causes me that Gary and I have our personal credit cards and our business credit cards, and different businesses have different credit cards. So you can imagine this is a lot of different monies and expenses and credit cards and all these things. So that's why it requires this really this practice, and it's constant. Because if we were to let this, not look at it for a few weeks or a few months or whatever, you can imagine the chaos. It would be almost impossible. But yeah, we manage everything on credit cards. We write very few checks these days unless it's required. All right, Jessica says, like personal banking and creating new accounts, is there something similar that needs to be done with a banker in your business bank accounts? Yeah, but we don't really have, business doesn't have all the buckets. So your personal side, you really are managing your cash flow for very specific spending. So that's not necessary. you're not really building savings accounts, for example, out of your business. You have your revenue, your cost of sales, you manage your expenses, and then you take the profit. You manage your true flow of money through the bucketing system on your personal side. The only exception is I do recommend that you have a retained earnings bucket on your business, that you're building up that bucket, that you're cover your butt bucket that you borrow from. It's your own little mini bank account, if you will, so that when you're in the red some given months, you borrow and pay that back, and you're automatically always sweeping that if you don't have money that you can lend yourself in your personal side. So it's a really good, safe way to help you manage income that varies. All right. Jessica says, would love to work with Whitney. I just don't feel I'm ready for her. I have a lot more to get together. You know, Jessica, that's okay. Not to worry. What Whitney, how she works with everyone through the coaching program. So she's there for everybody at different levels. For the coaching program, for some, it's just accountability and to have a community and to ask questions. In the community, people are at all different levels, and everybody doesn't care where you are. So if you just want to be in a community and not feel alone and trying to do this, it's a really great place to be, and Whitney will work at whatever level you're at. If you feel like you need just a money coach, if nothing else. So just so you know, that you don't have to be at a certain level. You don't have to feel bad wherever you are. It's for everyone. We're just here to help all of us be better at our money and get to a place where we can feel good about it. Brenda says, like Janine, having a consistent salary and being able to plan for future as a commission-based realtor. Yeah, so just so Brenda, I have to read down a little bit, that we really do have to get to a pretty, what am I trying to say here? To pay yourself a salary out of your business, you can do that once you get to a very consistent, predictable income or revenue stream, and then you pay yourself a salary, a consistent salary, and then you can keep money in your business and do distributions and different things. You know, and we do that with some of our businesses, but mostly Gary and I, we don't even want to take a salary in our businesses because the taxes are higher. When you pay yourself a salary, you have to collect unemployment and Social Security and the different pieces. And so we tend just to pay ourselves distribution. So it's a little bit more advanced, depending on how much consistent revenue you have. But most of us, especially as we're growing our business, it takes quite some time where it's pretty predictable month over month or year over year that we're going to have. We know we can really guess or judge or estimate or predict, maybe is the best word, how much revenue we're going to make, because we've been in the business for so long. It's pretty consistent that then we can just take a direct salary so that our bucketing system and our personal finance side is easier. But for most of us, it's like this. That's why we really have to get better at it. So Penny says, making sure that there's enough commission to cover the business and have funds to support myself. Yes, and that's why you run the business separately. Because just like on the personal side, when we look at our business expenses, we might need to cut out some spending. I mean, that's probably the first thing when you do the spreadsheet, start putting in some numbers. And you might want to get rid of some of those marketing costs if they're not generating new business until you get your income up. But so just like on our personal side, we don't worry about our income until we worry about our expenses. Same on the business. I want you to look at all of your expenses and really see, like, is this expense necessary? Is this, gadget necessary? Is this app necessary? Many of us have been sold through all these real estate conferences we go to, for example, you need this lead generation thing. And if you use this and just get one more sale, it will pay, the entire year. We don't need any of that. I mean, we build our business through our networks. We build our business through watching, being very close to our numbers and know how many sales we need and reaching out. Like, we don't need all this stuff to be successful. We add the stuff as our success grows. We don't buy all the stuff in order to try to have success to begin with. So we probably want to get rid of a lot of our expenses, just like we did on the personal side. Look at those, get rid of as many as we don't need, and then add expenses as directly to increase revenue intentionally, and be very selective. The technology you buy, the widgets you're paying for, even the coaches you may have or whatever, to make sure that it's producing a return, that it's worth that, just it's meaningful expenses on your business side too. Are they meaningful? And meaningful means on the business side that they make you more money, or they cut down your expenses so you have more profit left over at the end. Right, Tanya says, knowing how much to spend on what, advertising, lead gen, anticipated taxes, and determining the ROI on them to see if I'm spending enough too much. Exactly. That's exactly what you'll be doing. So again, the takeaway is just play with the financial statement that we'll send over to you, and just take a look and assess yourself. Like, how is my business spending? And is there anything that I want to maybe take off for right now? And then we want to get, just like our spending on our personal side, we want to be very selective with the money we spend on the business side, because spending more doesn't mean making more. It just means more money in a lot of the vendors' pockets. And I just say, choose one good lead gen system or marketing system or whatever it is, and get really good at it. But the best tool to use to get good at, in my experience, and I still sell a lot of real estate, and I'm not in real estate sales anymore, and my number one tool that I use is my CRM. I don't spend any money on any gadgetry anymore, although, I have my real estate businesses and my Good Life luxury business now. So we spend a little money from the business side, but for me personally, how I make the money in real estate today is all through my database, is all database management. I'm in that baby every day, still today. And that's the main, it's my only personal source and my main source. And it makes me, many six figures every single year just on using that one tool alone. So I'd say get rid of everything and get really good at your contact management system. That's my own piece of advice. All right, so Sandy says, I tend to spend perhaps too much money on marketing ideas things. We all do, Sandy. And a lot of it is because it's just like on the personal side. We spend too much money because we're sold things all the time. Like, all that marketing's really good, and we think we need this, and we think we need that, and we spend money on Amazon here and on something else there. And because we're all, we all can be manipulated, it's not the right word, but sold, I guess is the right word. But same on our business side, is that on the business side, we can very easily be convinced that we need this or we need that or try this, and they make it all sexy and fun and technology, and oh my God, if you don't have it, you suck, or you're so old and antiquated. And we don't need most of it. Like I said, if you want to try and one add-on once you have everything else working, then give it a try, give it a test for 90 days, 6 months, but you have to monitor the expense. Is it attached to generating more revenue? Because every expense has to do something. So it needs to be purposeful expense. Like every expense in our business books, why do I have this expense? Well, if I have a salary expense, it's because I'm leveraging my money-making ability through having more help, because us individually, we only have so much capacity. So look at that expense. For marketing, is this marketing producing more money? Is this education? Is it just a great excuse to go off and go to some conference in Austin, Texas, or am I intentional? Am I going to spend this conference money and I'm going to meet new people, get new referrals, really learn something? But being very intentional. It's mindful money. It's mindful spending on the business side, just like it's mindful money spending on the personal side. All right, Jessica says, knowing where to file everything, chart of accounts. Yeah, once you have the chart of accounts, the cash flow accounts, it makes everything a lot easier. But most of it's money in, money out. Everything's clumped together. The money goes somewhere, but where it's not going is into our wealth building accounts, like money left over, where we have that financial security, plenty of money left over in healthy bank accounts, which are our buckets, and through our assets. That's what we want. We want cash in our buckets and cash in our assets. We want to manage all the spending very mindfully so that it's very intentional, meaningful spending on the personal side, and mindful, intentional spending on the business side, so that we have lots of money left over to grow our cups. Naomi says, saving for taxes. You have to save for taxes. Sweep, that's why sweeping is so important. Like off the top of every single check, do not skip it once. Sweep, 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 sweep. Sweep that, whatever your tax rate is, sweep it right off the top. and get used to what's left over. Sweet taxes are a cost of sale basically on the personal side. Cheryl says, how do business financials interact with personal finances? So hopefully that was, I think, Cheryl, that was your question at the beginning. So hopefully I answered that. But basically, we take our business, we run our business accounts separately. We take our profit left over any given month and we move it into our personal side. Then we flow and work all of our money on our personal side. So essentially we're doing all that together, but we're managing two different sets of books. And the books are very simple. You just need two sets of books, two different credit cards. You manage the income and spending on each. You move one to the other, and then that becomes the practice. It actually may sound a little overwhelming and frightening to begin with, but it really actually becomes very simple. Penny says, my business's greatest expense is a Time Warner VoIP. Anyone have any other options they are happy with? That's a really great question for the coaching club. So all of you in the club, maybe let you know if there's any better savings. I'm not sure. I think we use Time Warner. I do spend a lot of money on internet because of all this. So I'm not the best person to ask on that because a big healthy chunk of our money certainly goes to fast connectivity. So Paulette says, which CRM do you recommend? So for real estate, if you're in real estate, Paulette, then I recommend RealVolve. And if you let me know, I can put you in contact with them and I can tell you why. And then for non-real estate people, the contact management system that I recommend is Contactually. In fact, I just did a podcast here recently with Contactually to talk about that. But RealVolve for real estate, and there's a reason it's a real estate contact management system. So if you're in real estate, it's the best one on the market. And over the years, I've tried every single one because I know where I make my money. It's in my contact management database system. So I'm always on the hunt for the best one. And the two best, RealVolve for real estate and Contactually for non-real estate, since it's a real estate CRM. So Jessica says, do you have an MBC or a C Corp? You pull taxes before your total gross income in business, correct? So I have an S Corp, and as an S Corp, we pull all the taxes out of the personal side. We move all the profit that we move from the business side that we're going to move over to the personal any given month. And then we automatically sweep our tax rate directly into that tax bucket. And then we pay quarterly taxes out of our tax bucket on our personal finance side. Jessica says, what is the best way to create your ROI sheet? Is there a formula that you use or a way to set up to make sure you have all your appropriate inputs? I'm not sure I understand the question, Jessica, other to say that this is basically the spreadsheet. The only thing missing really from this spreadsheet that I created, and I just created it in through Apple's spreadsheets, whatever numbers. So I created it pretty easily. But the only thing missing from here is if you do have salaries or staff expenses that are not a cost of sale, like transaction management, then that is missing. And I'll probably add that before we send this out to everyone, so that if you do have salaried staff. But this is going to get you pretty close. And then if you're in the coaching club, we can work with you individually if there's anything that falls outside of some of these key categories. So Karen says, we're now looking at ways to cut down expenses to our cabin, like sharing the dumpster cost with our neighbor and asking for pickup every other week instead of every. Yes, Karen, that's excellent. So you're always looking at ways to reduce expenses. And once you're looking at this, though, if you're not looking at it, you'll never think about it. But once you start looking at this and managing it, you'll get very clever. You'll be like, exactly that. And every little savings adds up. And Gary and I still are asking all the time, do we really need this? Or can we share it? Or whatever the case is. But remember, wealth is not made. Financial freedom and wealth is not made on the income side, business income or household income. It's all made on the spending. Our wealth is made on spending, not on income. That when we have no leaks, then and every dollar spent is accounted to or attached to something meaningful or to making more revenue side, and then we can adjust levers. Then we can really amp up how much goes into our buckets and how much flow, how much velocity we can create, because then we know what lever we can pull that will drive more income somewhere. But more income is not the answer until all of our leaks and cups and buckets and spreadsheets and accounting is set up, and we're in the certain practices and behaviors. So a couple more questions and then we'll be done. And you guys are amazing. It's been 90 minutes. I know this is a lot. It's really just an introduction. It's very basic 101, but again, in the coaching program, we'll continue to work with you if you need it. So Janine says, how to set up a consistent salary or paycheck. So I need more information on that question, Janine, as far as can you set up a consistent salary? I would need to know a little bit more in order to answer that question. Usually for business, any business owner, there's no such thing, except for a few, there's always an exception. Maybe they have a monopoly or a government contract or something where it's guaranteed revenue no matter what every single month. The business ownership, if you're a real estate person, any of you that claims to be a business person, but when you're not getting a guaranteed check from an employer, you're essentially a business owner by default, if nothing else. And if that's the case, you need to have separate books. You need to set up yourself as an S corp or talk to your attorney or accountant to find out what might be the best type of corporation to set up. And just based on what your goals are of that business, growth size, and how one person, multiple people, more than one partner, there's different things you would want to know and how to set it up. But all of Gary and my companies are S corps. But what you want to do is set that up separately. You have your own, you have a credit card for your business and a credit card for your personal account. You have your P&L or your income and expense flow for your business, chart for your business, and one for your personal account. So you manage those two separately. When you're a business owner, you have to, what comes with business ownership is risk. What comes with business ownership is no guarantees. So that's why you have to get good with the money. You have to protect these things because it's really difficult, if not completely impossible, to build freedom, to build your wealth, to build that security where you're not month to month, commission to commission, house sale to house sale, and living with the stress for that, with that, just month to month trying to stay afloat with your business if you don't have reserves, and you have to manage your money. And starting out, you start out and, but over time, the goal is to get better and better and to use your business income to fund your buckets, to fund everything that happens on the personal side, and then to grow your wealth through your asset side. But the whole point, that I guess the takeaway here, is there's no such thing as guaranteed stable income. There's just not. Some of us, we can build our businesses to a certain level where we can take out a guaranteed salary, and then that becomes stable for a while, but only if you manage everything like a business and you know that the business revenue is growing, and then even you can increase your salary over time. If that's the way you want to pay yourself, that's great to have a guaranteed amount. But at the end of the day, you're still responsible for managing all those expenses and growing the business income on the revenue side so that down the expenses, you can take your guaranteed income. But the business has to grow to a certain size and have a certain level of predictable income where it's going to still fluctuate at the top, but it's going to be the revenue's high enough, compared to the expenses, that there's a big buffer that you can pay yourself a guaranteed salary. But most of us, I imagine, aren't there. But if you are there, I can talk to you a little bit differently, teach you a little bit differently of how we run our businesses and books at that level. All right, one final question, then I'll let you all go and enjoy your day. So Pat says two things: taxes and making sure I reinvest the right amount from back into my business. That's a really good point, Pat, is that there is this reinvestment piece, and you have your expenses and you're managing that. And then that's different than reinvestment. So you can have your retained earnings bucket. You can have actually another bucket, if you want to call it a reinvestment, that, where you can put in a capital, meaning a big sizable piece of capital outside of your expenses to fund something. Maybe, for example, you want to build a new website and maybe it costs, $10,000. So that would be a big chunk that you couldn't necessarily manage out of your expenses in a given month. But if you have your reinvestment fund that you can come from your investments in your personal side, you can in your investment bucket on your personal side over here, you could invest back in your own business. That's where Gary and I, we invest a lot back into our own businesses, and it's taken out of our investment bucket. We invest in other businesses, we invest in real estate, and we invest back in our own businesses, but it's managed out of that investment bucket. And that's how we capitalize Wealthy. We have a lot of money in the startup capital for this, everything I'm building here, these programs, everything I'm teaching. This is a separate business. Wealthy is a totally separate business. And we fully funded it and capitalized it and continue to reinvest it to grow it out of our personal investment account. So that's part of the conversation. It's like, oh, how much do we want to reinvest in any given business to really produce a spike and hopefully the revenue? But obviously it's always attached to generating higher revenues. All right, y'all. Hopefully that was helpful. Some just real overview, some 101. Just hopefully, my goal was to show you how similar your personal books and your business books are, how one flows from one to the other, and that at the end of the day, we need to continue to watch our finances like a hawk. And I'll close by saying that this is, if you're not listening to my podcasts, I really invite you to, podcasts are a great way to learn. And I bring on a lot of money experts and health experts onto my podcast. And it's on your iTunes, wealthywealthy.life, or Wealthy Wealthy Life. You can search for it through iTunes or go to my wealthywealthy.life website, click podcast, and you can sign up there. But this is a really wonderful interview with my friend Lynn Graft, and just talks about the art of storytelling for entrepreneurs. And any given month, any given week, and they come out once a week, and I'm really tackling a money conversation or a health conversation to help us all learn more, be better, live healthier, and build better lives. All right, y'all. Thank you for your time. Honor you, honor your time. Appreciate you. And remember, the coaching club is all for you. Let us know what you need and we'll get it to you. All right, signing off. Have a great, what is today? Tuesday, I think. Enjoy the rest of the day. Bye-bye.